Welcome, everybody. Welcome to NFTs in the Arena. You're with your host, Mike and John. It's been another whirlwind week, not only in the stock markets, but in the crypto markets, where Bitcoin is still trading at just under just over $19,000, and Ethereum just over $1,300. And with that, obviously, the NFTs and the NFT market has naturally been impacted, much like the whole world macroeconomic market has been impacted. And we can discuss that today. First and foremost, Jono, how are you?
Hey, what's up, Mikey? What's happening, everybody? I'm doing very well, eh?
Very good, Jono. Very good.
Awesome.
Well, let's just jump straight into it, Jono. There was an article that I pulled up. It was like 2 days ago, and it was actually on a website called Decrypt. And I actually see a lot of articles coming from this website that are somewhat reputable, so it's worth mentioning. And the title essentially went that is the Ethereum co-founder, who's Joe Lubin. I think not a lot of people actually know too much about this gentleman because of Vita's actual fame. It's not very often that a person will know who Joe Lubin is, but here we are giving his acclaim. And he was essentially saying that today's metaverse, which is obviously very much related to NFTs and crypto, is the internet circa as he deemed in 1994. But he also says, it's something that you touched on last week, the masses are coming. And we're going to dive straight into that. And I think now is a perfect time to actually establish who really knows or who really wants to know and be involved in Web3. And what I mean by that is we're going into what everyone is saying will be a recession. Or we are in a recession, essentially, but we're only going to see or feel the effects of this within the next 6 to 12 months. In the United States alone, people are looking for ways to generate revenue on the side because rent is increasing, interest rates are increasing, and that's happening all around the world. And it's actually mad to see how some people are naive to this, but a lot of people that are operating in the crypto space are obviously now feeling the brunt. People are obviously, at this time last year, I think Bitcoin was at $50,000, and now it's at less than half of that. So, John, having said that, I wanted to dive into what Joe had said. So, Joe Lubin is the Ethereum co-founder and CEO of crypto software Consensus. And he's essentially confident that the metaverse will one day encompass the full human experience. And what he means by that is it'll equally be confident. He's equally confident that this day is still years away. And it's something that we always talk about, that now is the time to get involved, sit and wait, and actually state your claim and make the most of it. Do you think that, or how far out do you think it will be until majority of society builds the trust and essentially evidently gets involved like people did with Web3? Because if you think about it, and before I ask allow you to answer that, it's just that I think using the metaverse today is a little bit like the internet in 1994. And at that time, I think what you would have to dial into the internet and you used to get your coffee or your breakfast, and you would come back a few hours later, then your email would be downloaded. And obviously that has changed significantly. And I think this latest merge from proof of work to proof of stake in Ethereum is part of this change in which Web3 is essentially experiencing, like the internet did when they started introducing broadband and the likes. When do you think, or how do you see this unfolding? How long do you think this will unfold, and how do you think it will unfold?
There was a lot to that.
There was.
Look,
and I apologize, but
no.
But I do believe you can do it.
Amazing. Look, what I think, how it's going to unfold and the ETA at which it's going to unfold is we in that unraveling process as we speak. So yeah, like essentially it's all about regulation, how people can bring their digital goods into fiat currency. All that kind of exchanges are going to need to be regulated through governments and authorities before we get to a fully solidified ecosystem, if that makes sense. And the ways in which that's going to happen, especially during the recession, is and the bear market itself is quite tough, because there can be a lot of awesome, innovative technology that comes to front, but there may be seed funding that's lacking, or just the typical retail investor that's lacking purely because they don't have that fund to spend. And especially with crypto being in a bit of a negative stigma at a global level, I think once that can be perpetuated and we find ourselves in a situation where there is a lot more trust, there will be a lot more on-ramping. And I think that's exactly what you were saying with what that dude was mentioning in that article. The masses are coming. And yeah, look, with the proof of stake on the ETH POW, we do see mass adoption from a B2B level, purely because these entities require trust, and proof of stake is a better mechanism at attaining that. And with that being said, I think there's also interesting projects that have come to fruition that I believe during a recession and a bear market can really bring a lot of value. And one being Zen, which is a free minting digital asset that was launched last week by Google employee number 21, Jack Levine. And when I listen to his story and his vision around this crypto, because it's free to mint, you only need to pay gas fee. This is where I see mass adoption happening, because the average individual that doesn't have the funding only requires money for gas in order to mint the asset. And this is a very innovative technology, and I think people need to research and look into this, because this is the future.
What is it called?
It's called Zen Crypto. It launched last week Saturday, and it's the only time since the ETH POW was launched that Ethereum became deflationary. And what this means is that half the network and more was literally half the volume of the ETH chain was used up by the Zen protocol on Saturday. And it was the first time it made Ethereum deflationary, which means that it was actually burning. And that's essentially what Ethereum wants. And hence this being a crypto that's free to mint literally expedites the decentralization of Ethereum as a whole. So this is very good stuff.
It's interesting, dude. It's super interesting. And I wouldn't say that we are in unprecedented times, but we are coming into an interesting time where the last time we had a global recession was in 2008, 2009, around that time. So it's not normal that we haven't had a recession maybe let's say, I think it's every 5 to 6 or 8 years. I can't remember exactly. But that's always simply what people would deem as unprecedented times. But it's quite interesting to me that during this period that we're going into, and this past year still, there's unprecedented interest in the Web3 space, in the metaverse, in cryptocurrencies, by some of the most powerful companies in the world. Yes, we all know that Meta, formerly known as Facebook, has fully I think they reorientated its efforts towards dominating the metaverse. And you could probably say they are, because they essentially helped put it on the map. For people like the everyday person. Then you also have companies like Apple, like Disney, that are probably quietly exploring the space. And even traditional brick and mortar brands like Walmart, Costco are diving headfirst into this. And the reason why I bring this up is because it speaks to my points of when the masses will come. It's going to be when familiar brands like Apple, like Walmart, like Disney are integrating these technologies into the everyday space, in which people will actually have to be forced into utilizing this technology. But I don't see it will be an issue, because much like any innovation, much like any change, it takes time and it takes iterations, and it costs a lot of money. So the people that have the money, the people like Meta, like Apple, that can have significant amounts of investment and are willing to take the risk. And what I mean by that, if you look at Meta, for example, I think they had staggering losses in the tens of billions just up until now in investing in the metaverse. And naturally, you're going to get a lot of scrutiny and negativity around that. But I'm of the opinion that they're going to get this right sometime. They will. And I think they'll be the front runners eventually. And why I bring that up is because think how many people use Facebook. Think how many people use Instagram. Think how many people use WhatsApp. These
Yeah.
technologies we use in our everyday lives will eventually be integrated and utilizing Web3 technologies, NFTs, cryptocurrencies, and we'll be transacting with people over these platforms. I mean, you've seen it every day. Instagram is allowing you to host your NFTs there. Twitter is. It's coming, but I think a lot of the negativity around it is normal, and I don't think a lot of people that are heavily invested in this space or even the slightest bit deterred.
Yeah, you know what? I do think Mark Zuckerberg's eyes are sitting big like this right now, dude. Especially with his latest launch on Oculus. I think with that merge, I do believe, despite the creatives that tested the Oculus and the comfort around it, I still believe that the whole idea of this thing around your eye has to condense itself into, like, for instance, sunglasses or a pair of spectacles or even a contact lens. If it gets to that type of technology, then Meta has how can you say, a physical product that they can literally merge with their digital metaverse that they're trying to establish. And I think that is the plan, because essentially that brings the average person into the metaverse in a way that's fully virtual. And much like that game, Ready Player One, it's like that.
The movie,
you know, but yes, sorry, the movie where you.
And this is the game.
So yeah, look, I do think that's the plan for them. And with the latest, I think the company, I don't know what the company is called, but the game's called OP Craft, which is basically a replica of Minecraft, and that's a fully on-chain game. And I believe that's where the metaverse needs to go, not necessarily just how we see it as NFTs. You know, just linking a specific JPEG or video to the blockchain, where you actually have a staking mechanisms built on chain that actually creates every decision that a person makes in a game actually finds its way onto the chain. And what this actually elicits is full decentralization of gaming. And this is what's going to bring the masses, because then a person can be completely anonymous on chain and develop remuneration through NFT protocols that are based on the game, much like the typical way that we're currently going about it, using digital currency and buying NFTs as a form of investment or collectible, or even just a utility case. Once all of that is well established, much like OP Craft, which is just a beta version. And I think, what's the company? There's a venture capitalist company in America that's full on board with this, and they even started a thing called crypto startups. It's AC something Z, dude, but it's one of the biggest funds in the States. So I just need to look that up and check that out. But yeah, I think this is a great opportunity for the virtual world and Meta as a whole, is the on-chain metaverse. And I hope that Facebook and Meta have the ability to actually design and are working on that right now, because that's where the advantage lies with other companies that are going to compete.
Yeah, dude, I actually think the way, like when you spoke about the Oculus and the way in which virtual reality goggles are currently being used, it's not technology which you can integrate in your everyday life just yet. And I think it will eventually move to the point where, I mean, you're seeing sunglasses now, or glasses that are introducing cameras, and they will eventually have some form of a screen on it. And I do think that the VR goggles will obviously innovate and change as they go along. But before we go on, I want to just tell the audience, if you are listening and watching, please like and subscribe to our channel. We've grown quite significantly since we first started. And today is quite a momentous day, whether you like it or not. So it's our first season, episode 20, coming to an end. Doesn't mean we're going anywhere, but we like to just make this look like we're actually achieving something. But
love it.
It's been quite fun, I must say, just doing this crypto thing, Jono. But I think one of the things I wanted to talk about is the markets now. the stock markets are taking significant hits, and with that, I think crypto is following suit, or it's following in parallel. Do you think that companies that are investing in the space that had invested a lot of money into cryptocurrencies, I mean, there was companies that put a significant portion of their money aside to invest in crypto. And I get told this often by people that like I work with or people that I see is like, why don't companies with excess cash, why aren't they investing in Bitcoin, for example? Because if a company invests $1 million in Bitcoin, I mean, everyone that's listening to this podcast, well, I would assume, has some form of hope and idea that the cryptocurrencies will turn around within the next 2-3 years. So why on companies, especially in this bear market now, where crypto or Bitcoin is at the very least at its a long-term low, do you think it's advantageous for companies to invest in crypto as a form of an asset, an investment asset in a way, a liquid asset?
Well, look, I think if, like you said, we all understand Bitcoin's store of value, and this is essentially what's given its a real profound importance in this day and age, is the ability to put $100 in it now, in a couple of years it's worth more, and it's outperformed other commodities and other asset portfolios. And this should be in itself information that tells any entity to say, yes, let's throw money at this, even if it's only 5% or part of our high risk portfolio. Yes, that does make sense. But at the same time, people are very industrial mindsets. Like they still have that old school mindset, let's put it that way. So they're still traditional in their ways. So they use their funds much the same way they used to always do it. Like people don't really find value in change, or at least most. Those that do are risk averse, and perhaps the main reason why they get ahead or find loopholes in the system. And this what brings me back to that VC, and I found the name they called A16Z, which is Andreessen and Horowitz, which is like a huge investment firm in the States.
Andreessen, Mark Andreessen.
Yes. And like if you look at them, as you Google them, it's software is eating the world. Like that's next to their name, dude. And that tells you something about how courageous they are about the space. They made a lot of their money in the whole internet bubble, investing in companies that they saw potential in. And they're doing the same thing with crypto. Even though they've done some bad moves, some of them have really transpired. And this is exactly what I think is going to bring a lot of value to this ecosystem, is companies like that are going to be willing to put in money to the next Steve Jobs, if that makes sense.
Well, dude, so Mark Andreessen is obviously a massive investor in this VC fund, ACT, that you're talking about. I have heard about it before. I mean, it's obviously a very popular Silicon Valley fund. Yeah. And I do recall, I think I read a book, it was either Peter Thiel, I can't remember now, but he did speak about Mark Andreessen. And Mark, I think, had invested in Facebook actually, and Pinterest and LinkedIn and Twitter. So, but the thing is, this is the power of money. It's the power of actually understanding where to invest. Because there were times when I was in Silicon Valley and I met various individuals at different levels in their career and in their life. And like you said now, Mark and this gentleman that he's obviously got the fund with have made some bad moves. But they don't ever speak about the investments that maybe they made in other companies when they were going to invest in Facebook, if you know what I mean. Like maybe they invested in MySpace first, for example. The point is that it's the courageous people, like obviously fortune favors the bold, right? And I think during a time like this now, it's incredibly difficult to be risk averse, because a lot of people are telling you now, we're going into this recession, cash is king. And what they mean by that is hold on to as much cash as you can, because it's going to be a bit turbulent over the next year or two. And if you have the money and the spare money to invest in crypto or stocks, because now is the time to invest. But I think it's even going to drop a lot lower. I don't think we've even reached the tipping point just yet. And why I say that is because I try to educate myself a lot on what is yet to come within the economy, and watching a lot of content on the property industry and the market, because the property market is a good telling of what's going to be happening outside of that in the whole macroeconomic climate. And property prices are dropping significantly here in the United States, and within the next 12 months, they'll be dropping by 30 to 40% in some areas, which is mad.
Crazy.
I'm seeing properties on
mad,
Zillow now.
mad.
Zillow dropping 200,000 within the last few months, and if you look at it last year, they would have listed their house for $2.6 million. Now it's already at $1.9 million, right? And we haven't even hit the recession officially. So my point is that I think if you are able to have funds to invest in crypto or whatever that is, you have to be obviously be very strategic about it, like you are. I think you are one of the most strategic investors that I know, and it's very reassuring to me. And you've gone through the highs and the lows, and I think your story of the time where you lost that crypto out of your control, which is not even your fault. Stolen, will be a part of your journey. And
yes, definitely.
So fascinating. And I think guys like Andreessen, they all have crazy stories like this, and they were just willing to take the risk. Yes, they were inevitably smart guys and maybe created money outside of that, but it's still a risk investing a few million into a company with the hope that it's going to work. And you're right, a lot of people will be losing money now. So I think it's an interesting time to be in this space, because the people that stick around, I think, will be the ones that reap the rewards in the next 4 to 5 years, because a lot of people are losing interest in this space because of the amount of money that's been lost.
Guaranteed. And this brings me into an interesting thought, because someone asked Jack Levine, the creator of Zen, how does he think regulation is going to happen in the general public? And he believes that it's about the government creating a digital currency that we can still perform as in a DeFi space, but as soon as you want to come back to the reality, let's for now say there is such a thing, before we move into metaverse completely. So in reality, you want to change your hex or your Ethereum to dollars. There is going to be a digital dollar that you'll need to convert it into and use that to perform payments, much like what you do now with I would say the dollar is already digital, in its own right. It's just not on the blockchain. So I think once that happens, it's going to be much like how we perform day to day right now. And this is what's going to bring a lot more people like Mark Andreessen to the show. Because once this becomes a day to day and everyone is on the blockchain from a global level, then you're going to see a lot more money just going into projects that's going to blow our minds. Because the technology that we got now to work with, now we just need funding.
You should do yourself a favor and go look at his website and see the companies that he invested in that did exits, and his current companies that he's actively invested in. It's the longest list of companies I've ever seen. That's insane.
I'm gonna dig in.
And big names, dude. It's actually interesting. Yeah. I mean, you could look at this as a potential, because I mean, a lot of the companies invested in, like you say, he's touched it and it's gone to gold. Would you be willing to invest in these companies when they go IPO? I would. Some of these companies, it's interesting.
No, you're right. And like I mentioned just now, they launched a crypto startup. So just like a startup grind, it's an educational idea that's funded by the organization to bring education and entrepreneurial education to this world. And I think that's a huge thing, dude. Because I honestly believe it's those kind of institutes that have found its way in culture, be it spiritual ones or education or financial education. These are the units of community that have brought such value to the world, whether they have scaled in Silicon Valley as a result or scaled in New York as a result, just from these small micro communities that just were thinking different, if that makes sense. And it just scaled to this point. And now we're much in a new space where all these individuals that think that way are finding their feet. Now they just need to merge the financial system with it. And that's the transition we're going through right now. And hence this second phase recession in such a short term. I know it happens periodically, every couple of years. But I do believe that's just Wall Street and them shorting the system periodically just to cop up assets as it drops.
The Federal Reserve, at least in the United States, has just been printing money.
My man, these cats are doing it, bro. Because big boys they're going to buy property now, bro. You know, this is the time. Like, things are going to be for sale.
You want to buy properties, wait a couple of months. It's going to be interesting. I mean, who are we? Who are we to take advice from anyway? But
we're no financial advisor.
Something that I wanted to talk about. There's this gentleman that I've come across quite recently. His name's David, and he's from a company that he's trying to get off the ground called Traxer. And what Traxer is obviously he had approached me because of my logistics background as well as my involvement in technology, where they're trying to create a DAO. And the DAO is essentially one in which they have technology that enables companies to track their shipping containers. Every shipping container has a unique ID, right? And there is various tools and technologies already out there allowing people to track shipping containers. But often when your container leaves the port or if it leaves the warehouse facility, it's on the road, and there's obviously a time frame from origin to location where you don't know where that container effectively is. And some containers, the refrigerator containers, have power and you can track them, but the dry containers you cannot. So this DAO through Traxer, they're utilizing AI technology and blockchain, where drivers of cars, trucks, vehicles, anyone that has a camera can utilize this technology via this and be part of this DAO, where you scan in whatever containers you see. You can have a dash cam, you can have your cell phone outside the port, whatever. Truck drivers would probably be the best people. But essentially, why does it DAO is that they're contributing to a community where the real-time information of that container is consistently being uploaded, and they're using that data to update the customer. And I think this is and it's interesting because they're trying to create a DAO where everyone contributes to it and you get paid for essentially doing that, which is obviously quite a cool idea. But I think they're at a point now where the technology is there. They have the ability to create this tool, but funding is obviously something that they need right now. And with the world going into a recession, a lot of companies, a lot of people are pulling back, and the willingness to invest is becoming your willingness to invest naturally during a recession. If you're holding a certain kind of money, you're going to be reluctant to do that. So my point is that these guys are trying to launch a product at a time in which people want to hold on to money. So do you think that because of situations in which we find ourselves in, where we are going into a recession, where most companies, regardless of how big or how much cash flow they have, will be looking at their money in a lot more stricter manner? Do you think this stifles innovation? Like, if this was prior to COVID, hypothetically, the acumen and the ability to garner investment probably would have been a lot easier, because it is a very cool tool and it adds a lot of value, and the industry is ripe for that. And now, obviously, they're going to struggle to find investments, I would imagine, at least in the short term. Do you think that's something that people don't even want to talk about, like how recession has a knock-on effect on innovation, for example?
Yeah, look, definitely, if your decisions are getting withheld because they're financially driven, there is going to be less action. So with less action, there's obviously less output. So this does hold back on innovation to some extent, but then we could argue, do innovative thinkers really care about financial decisions. So this is the thing. We can correlate that, and we could argue till the cows come home. We don't know. But I do believe very innovative thinkers aren't really financially driven in a way. They're usually very creative. And with that being said, there is perhaps CFOs that are around that can expedite decision making from a financial standpoint, which at the same time could gatekeep future potential. So yeah, look, right now, yes, a lot of organizations are holding back with the little bit that they have in terms of liquidity. But I do think that organizations that are using that liquidity and putting it into portfolios that have good store of value, like Bitcoin, like Ethereum, I think they're going to have an advantage when the bull market comes around again. And that's going to be roughly around when Bitcoin halves, 2024, coming into 2025. And I believe China is timing that pretty well. They've seen that come to fruition in the past, and they thought that let's time our digital yen much in the same fashion with the Bitcoin halving. And yeah, look, I think that's going to be a huge time in the financial sector. And the companies that have used that little money that they have, that's just going to 10x and more, bro. So yeah, look, the advantage that's going to give them against their competitors is going to be huge. Last thing you want to do is sit with your dollars, and that's going to deflate over the next 5 years. So yeah, let's see how it goes.
Yeah, no, I totally agree. It's going to be interesting. So, Jonna, we've come to the end of our 20th episode, one in which I thoroughly enjoyed. I think in saying that, I want to thank a lot of the people that have been listening and supporting us. I think this is just the start.
Thanks, guys.
We're learning as we're going.
Yeah.
I just think it's an episode that I wanted to just make like lighthearted and one in which we can just have an easy conversation, because it's often, I think, you find yourself in this everyday world where you get lost in the source, as they say. So yeah, I want to thank you, John. It's been great, dude, and I can't wait.
It was lovely.
The next episodes, we are looking for ways in which we can also innovate our setups and our camera setups. So I'm looking forward to that, and we have some very cool guests lined up. People that are very involved in the Web3 space, some very cool products, some very cool virtual reality products. I eventually got Alex Levine that will be agreeing to come on the podcast next week. With the
amazing.
With the digital helmets in which his company has created, but I'll leave it all for next week. So I want to thank everyone. Please like and subscribe to our channel. Jono, as we always do, any parting words?
Yeah, bro, I actually someone introduced me to a very interesting quote yesterday. It's a little spiritual and compassionate, but it goes like this. If equal affection cannot be, let the more loving one be me. And I was like, yeah, blew me away, bro. So yeah, much love.
Dude.
Keep loving, bro. That's what it's about.
Keep loving, dude. Keep loving. I mean, like, as the saying also goes, today is hard, tomorrow will be worse, but the day after tomorrow will be sunshine. Having said that, Take care, everyone.